Hello. With reporting season just around the corner, we thought now was a good time to review our telco sector heading into that reporting season. So we've just recently published our FY15 results preview piece on the telecommunications sector. We won't bore you with the details now, but I think the most interesting thing from that sector piece is that we've reduced our recommendation on the telecommunications sector from a hold recommendation or a neutral recommendation to an underweight recommendation. So that's really the main change that we've done leading into this reporting season. Now the key reason why we've done this, or the number of reasons why we've done this, is really around the stock performance over the last little while. What we did is we reviewed a basket of major telecommunication stocks. We didn't look at the telecommunications index because it's 90% Telstra, so that skews it. So what we did is looked at the bigger names and equally weighted it. So that's Telstra, iiNet, M2, TPG, and so on. We looked at that basket of stocks over the last 10 years, and what we found is the telecommunications basket significantly outperformed the All Ords index. So over a 10-year period, 7 out of those 10 years, the performance from that basket of telcos was around 16% better than the overall market. So a fantastic result from the telecommunications sector, and certainly one to be very proud of. Unfortunately, with results like that, they're hard to continue to maintain. So we think from this point, it gets much harder. Secondly, the couple of years where the telco sector underperformed was really around pricing pressure or pricing wars, where you saw a lot of competition happening in the space, and we think we're about to enter that sort of period again. Over the last 6 months, we've seen significant changes in telco prices, and that's really started to trigger this pricing war that we think we're going to see over the next little while. And when that happened last time, that caused the telecommunications sector to underperform, so we think that's a big risk. Secondly, the strong earnings growth that the telecommunications sector has seen over the last 5 years, a lot of that has been driven by M&A. So you saw a lot of the smaller household internet service providers sell their businesses to the larger listed ones. Now, one of the main reasons they sold their businesses was that they realised with the NBN coming along, it had some pretty negative consequences for their earnings. So they took the opportunity to sell to the larger listed players. They're now about 95% of the market, so there's not a lot of options for M&A in the consumer space anymore. And the NBN is now starting to get critical mass. So in June, they had just under 500,000 active customers, which puts them at about 5%, just under 5% of the market, almost as big as Dodo or M2 that some of you may be familiar with. But at the rate they're running, they added about 100,000 active customers in the last quarter. So at that rate, they could be closer to 10% of the market within the next 12 months, which means that the NBN is going to be hard to ignore in terms of its earnings consequences. And we think that's going to put downward pressure on the telco sector overall. So with that in mind, we've moved to an underweight view on the sector. We have sell recommendations on TPG and iiNet. We have hold recommendations on Telstra and M2. We think both Telstra and M2 have very unique business models, and those unique business models provide them with a bit of a competitive buffer. And especially on Telstra, their balance sheet is incredibly strong. It's undergeared relative to the board's guidance, so we think it has the potential to surprise with further balance sheet activity, be that M&A or buybacks. So we think that's fairly well buffered. And our key picks in the telecommunications space are actually NextDC and Big Air. And both of those two stocks have nothing to do with household internet service providers. So they're not really pegged to the same NBN-related, market share-related issues. So have a look at that preview note and contact your advisor if you have any questions. Thanks.